Hey everyone, this is Casey Stubbs with the How to Trade It podcast, and today I'm with Mike Shorr from the Prosper Trading Academy. Hey Mike, how are you doing today?
I'm doing great. Thanks for having me.
It's my pleasure, and I was really interested in some of the conversation that we had before the show about your really following the president on all of his tweets. How much of an impact does he have on the markets every time he uses his Twitter account?
Uh, let's put it this way: that I mean, he certainly can. Take yesterday afternoon, for example. You can't see my screens, but yesterday afternoon, about 1 o'clock Chicago time, that's when he came out with his, stop negotiating the stimulus tweet, and the market tanked. Good. I mean, the market before that was in a slow grind up. It was very orderly, easy to trade, quite frankly. And then suddenly all the things that you were looking to buy were suddenly available, and you're like, what in the heck just happened? And you're looking. The first thing that happens, the first thing that you think of when that happens, when you don't have prepared remarks that you're waiting for, is who's on the Twitter machine right now. And literally, I was telling you, I have one audio alert on Twitter, and it's when he comes out. And because it's not just the fact that he is tweeting; it's that it's not planned. And we were given the example of Powell. When Powell comes out, you know exactly when he's coming out. He's coming out at 9:45, and guess what? He's out there at 9:45. Oftentimes, his remarks that he's going to read to you have been pre-released, at least to the press. So there's very little surprise in there. Sometimes you'll get a little bit with the Q&A back and forth, but not really. But this obviously out of nowhere. So then you get not necessarily into damage control, but into risk assessment. How real is this? Is he about to take it back? Is it about somebody going to turn it off? Is the market going to really discount it? And how long is it going to take? And so we're always talking in the background about those things.
So, is this a is this an opportunity for traders, or is it something they need to be watching out for?
Um, I would like to say both. It's certainly something. I would say that the latter is probably more important. I came up with the term for our room. I called it the Twitter piano. That just out of nowhere, you're walking down the street and then suddenly you get hit on the head with a piano because they're not prepared. They are the musings of somebody who has an open conduit where normally if a president gets upset, let's just say before the Twitter age, they would they storming around his, the Oval Office, and his aides are trying to calm him down. Finally, they get him calmed down. He insists on going in front of the press. They put, it takes however long to get the press corps together, goes out and holds a press conference. It's hard to stay mad and, I don't want to say crazy, mad and saying things, off the cuff for 2 hours. This, I really don't know if there's somebody looking over his shoulder, like you can't tweet that, or if they literally have a kill switch that, turn his Twitter off.
I doubt
But
it.
I doubt it.
I
I doubt
think
he left it.
if anybody was going to try that with him, they probably lost the battle.
I would
Yeah,
hope so that somebody on the PR side would even, and this is always the point that I make in the room. It's like this has nothing to do with whether you agree with them or not,
right.
and it's the fact of that it's not filtered at all. Even the best idea still needs to have a solid delivery to it. Otherwise, it just sounds like, well, take that with a grain of salt. But if there's nothing else in the market, like at 1 o'clock on a random Tuesday, to counteract that, it's like, well, that's the only thing that we can react to until something else comes in. Is it a level in the market in general? That's what I would like to think that it was yesterday. Or is it another piece of news that comes in behind it? Or is it somebody walking back, hey, you didn't understand what the president was saying? The president's not going to say that, but his press secretary could, or another senior aide walk that back. Is that going to happen? If so, it's going to happen in 5 minutes, 15 minutes, or after the close when you can't do anything about it.
Yeah, and it's interesting just in technical analysis when you talk about levels. Sometimes news just confirms levels and help the market respond, because it was the SPY, this S&P 500 was coming up against a daily resistance point towards the end of the day when that happened yesterday. And it was just kind of interesting that coincidence coincided. But you
I
find
would
that
say that
happens a
Trump is
lot.
not. I was going to say Trump. I don't think was looking at his daily chart when he put
No,
that tweet out.
no.
But there were traders that were looking at it for sure.
Right. So people were probably getting ready to look at some shorts anyway. So some of the people might have done pretty well. How
Yeah.
about you? How about you? Were you able to respond well to that? What happened? What was the result of that yesterday for your trading?
What I was looking for when that happened. So we didn't have a lot on. So I run the short term options here in at Prosper. We do some swing trading, which we have positions that typically work themselves out. Let's just say generically 2 weeks and in. But the majority, I would say 85% of our trades are day trades, which means that I'm in them and out of them anywhere from 10 to 45 minutes. If I just option plays, those are very, very straightforward, buy call, buy put, depending on whether you think the market's going to do. We happen not to have anything on at that point, which is nice because usually there's very little trade between 11 and 1 Chicago time. That's the New York and Chicago lunchtime. So usually, unless the market has an axe to grind, or if you have an axe to grind, it's probably best to sit on your hands during those times. Don't try and be a hero. Liquidity goes down. There's just a lot of reasons not to trade it, because everybody who quote unquote matters in the world isn't trading at that time anyhow. So you shouldn't either. But this was shortly after that. And so what I said is, okay, we don't have anything on. I'm not really a big believer in what he tweeted, saying not that he doesn't think it, but saying that was just he pushed it too far with that. And he's going to need to, because my language is a lot more colorful on our Slack between our traders than I can push out here. But I was essentially saying this is BS, which means I'm looking for a place to dip in. And so what I immediately did is instead of saying, well, I'm just going to sell it with remember, I'm trading options. I'm not trading E-mini futures. E-mini futures, you can get out for a quarter point no matter almost how fast we're moving. Options, immediately those bid-ask spreads are going to go out. So you're going to be giving up a lot of slippage in trying to, either hit that falling knife as it's falling or catch it. You just have to plan for that. You need to have some sort of reorganization in the market before, even in something like SPY or Triple Q or even your Apples and Facebook, which are very, very liquid. Those are still going to widen out, and you're just going to have a hard time doing that. So what I was doing is I said, okay, I'm calling BS on this thing. So I'm looking for things that get overextended to the downside. And I have scans for that, and I have methodologies for that. And when that happened, so, okay, now I think that it's overdone. I'm watching the overall market because this thing is going down. It was going up, and now it's going down because the market's going down. Understandable. But when the market finds its level outside of that, I'm looking at the things that got overrun. And so I'm looking for that overextension. The market bottoms out. This thing bottoms out. That's where I'm looking. And I'm oversimplifying it, but I do have methodologies that are built for that actually translate really, really well to option trading.
So that's actually so in this specific situation, because you were right, and obviously in trading you're right and you're wrong sometimes. That's just the way it is. But you were right on this call, and so that created a really big opportunity for you because you thought the market was going to continue in the direction. This was just a pullback, really.
Right, exactly. And you brought up an interesting point there about being right and wrong. I have no problem being right and wrong. What I do have a problem is being very wrong, because that's on me. Not that if I had just held on to this trade, it would have been horrible, but I didn't manage it correctly. So in a setup like this, and we have actually a name that we came up with yesterday for this methodology, but our entry point has a very, very close and defined level that if it doesn't hold that, get out really, really quick. Don't sit there and say, well, I know it's going to come back. I didn't know it's going to come back. I thought it was going to come back, but I don't know anything. And that's what I think a big fallacy that a lot of people who are newer to trading think, that experienced and successful traders, that they know something, that, that there's like some curtain or some velvet rope that we get to walk behind. It's not like that. I mean, of course, experience is going to have a lot to do with that. And you can argue that maybe, I'm better at my systems or have more of a better setup than you do. But a lot of it just comes up to, risk management. You can have all the best ideas in the world, and if you can't manage your risk, you're going to blow out. You just are. I've seen it way too many times.
So, speaking of risk management, I've tried some options trading. That's not really my specialty. I love the idea of short-term options, though, so that's why I'm excited about talking to you.
Yeah.
How do you manage risk on buying a call?
I mean, it's pretty depending for me, depending on the methodology I use. I use different levels, but it's not like futures trading where you can define your risk by ticks or by dollars or something like
Right.
that. What you have to do with options, one, remember you're dealing with a larger bid-ask spread. Even in your best options, you're looking at anywhere from, let's say, 2 to 5% bid-ask spread of the premium that's involved with buying the option. So you're going to have some slippage in there. So I'm not trying to take 2 cents out of something. Where if I'm trading e-minis, I might be trying to scalp a quarter point out of, well, a quarter point's a little, that's the tightest you can get. A point out of something that is going to have a daily range of 40 handles. That's, you can certainly do that. With this, I do it as a combination of two things. If I'm leaning on a support or resistance level, that is going to be, no matter where the price is, that's going to be my out. So if I buy this thing at 102, for example, and I think that 99 is my support, once we trade 98, I'm getting out of that no matter what it costs me. Because I drew my line in the sand and I was wrong. Get out. But it's and then so that's one way, and then layered over that is a percentage of the premium that I paid. For example, with one of our short-term methodologies that we use, I will say I'm willing to take a 20% hit. So if I buy something for $1, I will stop myself out at 80 cents, and then I'm trying to make 27% when I'm right. So if I buy something at $1, I'm selling it out at $1.27. As long as I'm right more often than I'm wrong, and I do it a bunch of times, we're gonna make a lot of money doing that.
Right.
So it's a function of technical support and resistance and percentage of premium.
Okay. And you're just playing the mathematical numbers that that you're going to be
Yes,
wrong, but if you can follow your process over the long term, you're going to grow your equity, you're going to grow your account.
right, and that's why it's important to be self accountable. To don't just say, "Hey, my account's up, I must be doing well." That's not necessarily true. And I stress this all the time in the room. There are bad trades that make money, and there are good trades that lose money.
Right.
So the important thing is when you lose money, why did I lose money? Well, because it didn't do they weren't playing by the rules. And that happens. Or why did you make money when this was a horrible trade? I shouldn't have done that. So I got paid tuition to learn a lesson. Those are nice. Don't get in the habit of that, because if you're going to make bad trades over the long haul, you're going to lose money.
It's going to catch up with you. The thing that
Yep.
happened to me the other day where I got a little bit emotional and I jumped in the market because I wanted to make back some money, and
Yep.
I'm really good at not doing that, but I did it against
Yep.
my best decision making, and it worked out for me. But I was kind of like rewarded for being a bad boy.
Right.
And
Absolutely.
that hurts you mentally because the next time I do it, I'm not going to be rewarded. The market's going to make you pay for that eventually.
Yeah, it absolutely will. The same goes for I'll have students that won't stop themselves out when I told them that I am, and I'm out, and they'll be let's just say we bought something for $1 and I stopped myself out at 80, and this thing's trading 65 cents, and they held on, and then it trades back up to $1, and they're like, "Whew, I'm out of that for break even." I'm like, "That's a horrible trade. You just
Right.
took a 35% risk to make nothing." Put
Right.
that into my risk reward calculator that I gave you, and find out what that's going to do if you do that 1,000 times over the year.
So the thing is, yeah, they got out of break even, but they're not telling you the times that they're losing everything on that
They're still
trade.
holding it. Yeah, that thing
Right.
is zero now.
Right. Right. And so yeah, you got to be honest with yourself on that kind of stuff.
Yeah.
So when
And
you're putting those stops in, are you putting hard stops?
yes, because in different than the swing trades where we can deal with bid ask spreads that are wider because we're looking over a longer time frame. But really, I only trade, and I say only, I have a watch list that I call the usual suspects that it has about 80 different stocks in it, which is so it's plenty. It's over all kinds of all different sectors, smaller cap, bigger cap. I don't trade a lot of stocks that are under $20 just because even if something is a volatile $20 stock, unless it's going from 20 to 40 in a day, is really hard because if you get a 1% move, that's 20 cents. That's not very much to try when the strikes that you're trading are half a dollar wide.
Right.
So these are stocks that are liquid, have good bid ask spreads, good volume, and I don't have to worry about setting my stop and getting filled 50 cents later. If I get slipped, I get slipped for a dime, which stinks, but at least it's defined by me, and I expect it.
So with options and you're the short term and you're dealing with lower prices on these options, a dollar, can you get large percentage gains on your trades pretty quick? Because I do a lot of stock trading, and the way that I do it is I'll buy the stock, and when it's up 5%, I usually move my stop to break even. I try to ride it out to 5 to 10 to 15 to 20% gain, and it usually takes some time.
Sure.
Like a week or so on these moves while it's swing trading really.
Right.
So if you're doing an options trade, you're doing a short term, how long does it take to get a 10% winner?
Well, that's what I was saying. I mean, I can go and give you the numbers, but my holding period is like 10 minutes to 45 minutes, and my target is 27%. So my average winner is not 27% because as we get better and better, I will run a trailing stop, and sometimes it doesn't get to that 27%. It pulls back,
Right.
and I get out for a 15. But don't quote me on this, but I think I'm looking at like my average winner is about 15%, and I think my average loser is somewhere around 8 or 9. So my average winner is more than 50% bigger than my average loser.
Right. And so you
That's
you can roll with like a 35-40% winning percentage and still make money doing that.
right. Absolutely, you could. I mean, thank goodness ours is higher, but you could.
Right. Yeah, that's really good. So
Jab, 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 knockout.
and so that's all you need is a few of these. So you're targeting 27% on
That
every
that's
trade.
my that's my target. Yeah.
Right. Do you
Now
ever
whether that
expand that out to try
sure,
to make doubles?
sure. Yeah. Then what you do is you're like, wow, we're getting close, folks. If you want to get out at that initial target I gave you, go right ahead, or pull your offer, run a tighter trade-in stop. So let's just say that we have a 30-cent trailing stop on this option that's trading for $1.20. And we start getting up to where we either see resistance or we're getting close to our target. You know what? This is still showing probably even more strength than when we got in. Instead of that 30-cent, take that trailing stop to a 15-cent and let it run. And then, if it fails, you kind of thought it was going to fail anyhow. Yeah, you didn't get your 27%, but you got your 20, but you gave yourself a shot at 35. Okay, well, as long as you get those from time to time, and I'll be honest, my students do better than I do because I'm off looking for the next thing. They got one trade to watch.
Right.
They're in that, and believe me, they're watching it because I'll
Yeah.
hear about every uptick and downtick.
Right.
Is this getting lower? It's getting lower. That's going to happen sometimes, folks. But so I'm always, I'm off, and really, my performance matters in that I can point to it and say this is what I did. But what's most important is that they're making money because that's this isn't a hedge fund. I am trading, but I'm not trading necessarily for return. The company, if we make money, which we better, that's great. But that's not really that's not what is driving. The driving is the school and the education and the learning and also just I don't know if you trade alone. Trading alone is a really lonely place. Just having somebody to bounce ideas off of, or saying, "What am I doing wrong here?" Over the last week, I'm like, that couldn't hit the broadside of a barn. You're not doing anything wrong. You just, you got a bad market. That happens, or you are doing something wrong.
Right. Right.
In the pit, you wouldn't think about it, but you stand next to a guy for long enough. It's not like he's going to have wildly different stuff on than you are. I mean, sometimes they'll be a little bit different, but you'll talk about this stuff, even though technically he's your competition.
Yeah.
You do realize that there's enough to go around for everybody.
Yeah, but also just being in the presence of other people, something usually rubs off on you. If you're in the presence of greatness and you spend time with them, that just flows from one person to another.
Yeah.
And I would agree too with trading being a lonely business. You don't want to be isolated with this COVID thing and everybody at home. It causes a lot of messed up people, right? They get isolated. They're not talking to people. They're all alone. And, everybody's dream job is to sit in front of their computer screen and work from home. But the reality is I know some people that have done that and they've accomplished their goals and it wasn't what they thought it was going to be. And now they're actually depressed.
Yeah. Yeah. There's a very physical, palpable thing about this, and your ability just to talk to, it doesn't even have to be about trading. I mean, when it gets slow, I do story time. These guys are always asking for story time. I mean, I have stories. Most of them are true. But yeah,
but no one knows which ones are and which ones aren't.
No, I don't. And no, they're all the ones I tell them are true. But they don't hear all the stories either.
Yeah.
Remember, I was on the trading floor for 17 and a half years.
Oh, I didn't know that. I actually didn't ask you about your past. Usually I start the show and I say, well, what tell me about your past, but I just jumped right in with you.
That's fine.
Yeah.
Yeah.
So how long have you been trading and how did you get to where you're at today?
Let's see. I became a member in 1994. I started, I think it was May of 94. So right around the turn of that year. So 93, 94 is when I got my first job as a clerk, and I picked it up pretty quickly. And so, yeah, within 6 months, I was on a membership as a junior trader, and that was at the Board of Trade and the Treasury pits. At the time, the bond pit was the largest pit. Then they moved the benchmark note down to reflect more of a 10-year. So the 10-year became the major pit, so we moved over there. Still, we had presence in all three the Treasury pits, but depending on where we had the most people was in either the bonds or the 10-year. So I did that. I went out on my own after about 2 years with a partner. So I guess we went out on our own, and then we were acquired by a company who was starting up. A guy who stood by us in the pit, so the reason to have people.
Right.
He went. He was hired by a company who wanted to start a bond operation, and so he's like, "Yeah, can you set up a group?" He's like, "Yeah, I think I can." And so he contacted us, and that's when we started there. And then I ended up running that group, from '99 to 2002. So I actually moved up to Minnesota for that because that's where operations were run out of. And then I came back down to the floor and worked for groups in the Treasury. When when implied volatility started getting really, really buried, like almost I don't know how much your listeners know about implied volatility, but kind of like a baseline volatility for a 10-year option at that time was about 7.5%. And it got down to trading in the 2 handle. So, basically the implied volatility was cut by 2/3, which means that stuff's not moving and it's a pick 'em market. It's so tight, and you're moving huge positions on for nothing. And so I was like, well, if we're going to do this, I'm going to find a better place to do it. So I went over to the corn. One, it was interesting to me, and two, it was 9:30 to 1:15 are the hours there. So that's much better than showing up to work for your bond position at 5 o'clock in the morning. So that was, and it was interesting, and when things get going over in the grains, if you have a drought or a flood, which, of course you don't wish on anybody, but when those things happen, it's just like trading lumber or something like that when a hurricane comes. I mean, it's absolutely, what people think when they think of trading and floor trading, that's what happens over in the grain pit. Now it doesn't happen, thankfully, every year. Of
Right.
course, some traders out there would wish it happened every year. I don't, but some do.
Yeah.
And so then just the migration from the pit, as screen trading became more and more and more prevalent. I was lucky enough. We still don't know how we found each other, but they found me over at Prosper. And like I said, I came off the floor in 2013, and I started with them in 2013, and so I've been doing that ever since.
Cool. Well,
Yeah,
that's really good.
yeah, really cool. I think a really cool transformation. Because let's face it, a lot of these guys, they didn't make it, and I don't mean they didn't make it professionally. They didn't make it mentally, and some of them I don't want to be a downer, but I mean a ton of suicides, and we have board of trade groups where these guys are dropping like flies because they were really, really successful traders, and then suddenly they don't have any other skills. They just kind of they work their way up from high school, which is fantastic. But now you don't have the floor to go to. What else can you do? I'm a bond options trader. Well,
right.
Did you try and go to a Wall Street firm? Well, where'd you go to school? I don't know, Brother Reed. Saint whatever. Whatever high school you went to. No, I don't have an MBA, and so it was a nice transition. I was probably at the age where, how much do I want to stand in a trading pit anymore? And what am I going to do? I'm not like the kind of guy that's just going to say, well, I'm done. I'm not going to do anything. Right. This was a great way. And also, believe this or not, there's a big altruistic part of this that, I really think that we're helping people, in good or bad. I'm either showing you that you don't have it to trade, because I don't want to put it out there that everybody can do this. It's so easy. I can teach anybody, almost anybody, unless you're just not very bright at all. But anybody, I would say, from a high school level, and I don't know if I could teach my son. He's 14. I could kind of teach him, but
he's got to want it. Like my son's 14
exactly.
also, and I just had a recent discussion with him about the stock market, and he's shown some interest, but I just dropped some seeds. I don't want to force anything. So if he's interested, I'm all for it, but I'm not forcing it.
No.
Yeah.
But it's the mental game that is really, really, it's hard to teach and it's hard to learn. But that's, and I've always said that through all the clerks and junior traders and senior traders that I've trained, and now, at Prosper for the last 8 years, that is the biggest indicator of the success of a trader. It's not necessarily how much money you have, or how fast you are, or how good you are at math. It's your ability to realize a loss. That's the biggest indicator I've seen. That and that is totally mental, because everybody can hit stop. Everybody can do that. There's nobody out there that can't stop themselves out. There are some people that won't, and they just sit there with a bigger and bigger horrible position that eventually your key card doesn't work to get on the floor the next day. It
right. No, that's it right there.
That's
well, that's pretty cool. I wanted to ask a couple questions about your training.
Sure.
So you're in charge of the short-term options, which I think is awesome. I love it.
Yep.
I love short-term trading. If they sign up for you guys, is there an educational package available with it? Because I'm thinking, okay, if I jump in here with Michael, he's way over my head and he's going to be saying stuff that I have no clue. So I don't want to jump in without knowing a little bit. So do you guys provide some foundational stuff with that?
Totally. So in addition to doing the short-term options, I'm also the director of education here. So I know enough about everybody's stuff to get myself in trouble. And I can certainly, somebody who has never had any experience with this, I can certainly help them along those lines. And as a side note, I don't know why more people don't, the funny thing is, when the whole time that I was on the floor trading, I could count certainly less than 5 times that I looked at a chart. And you're like, what? How do you not do that? Because I could care less where the futures were. I was a market maker in the option pit. I was concerned with what the order flow is and what implied volatility is doing. I could care less where the 200-day moving average is, where this volume this volume bar is coming in or whatever. I didn't care about that. I should have. In retrospect, I should have, because you know what? Even if I don't care about it, other people do, and they're looking at it, and that would have given me a lot of insight and leans to why people are doing what they're doing. But the people that taught me, they didn't look at charts either. They had a guy upstairs who was the futures trader. We were trading options. Shut up and learn this options. You don't know what you're doing anyhow, Mike. And when you're young, you're like, yeah, I don't know what I'm doing. And so I should have done that. So that being said, we do have, like I said, I've either proctored or written all of the material and videos on our campus, and so I know where everything is. There are literally hundreds of videos that we do. So let's just say that I have an interesting, or maybe it's not even interesting, a possible setup that is setting up. I'll just turn on the recorder, and I will just, a big thing of what I do with my teaching is I just talk out loud what I'm thinking, because that, learning how a trader thinks, you kind of think, well, yeah, of course that's what I'm thinking, but that's because I've been doing this for a long time. Just the same way that, and I don't want to compare myself to a surgeon. I'm not saving lives here, but a surgeon's not thinking about the heart valve transplant that he's doing. Or she's doing. It's ingrained in them by the point that they're actually doing it. But so if I say, what the heck are you doing? They're like, what the heck am I doing? I'm taking this out, and I don't even have enough knowledge in that to even sound like I know what I'm talking about. But kind of the same thing, talking through that and saying, this is what I'm looking at. This is what I see as the good things. This is what I see as the potential risks. And so we do have definite book learning, because people learn differently. Some people read, some people listen, some people see. I could explain things 3 different ways, and I just get blank stares or blank ears from people. And our CEO, Scott, who's our other options trader who runs our options volatility room, he'll come in, and within 30 seconds, he didn't do anything necessarily better or worse than me. He's actually better at discussing things than I am. But he'll just do it a different way, and they'll be like, "Oh, everybody gets it now." And I'm like,
right.
"That's what I was saying. That's exactly what I was saying." They're like, no, you weren't saying
well,
that.
I'm a bit on the receiving end of that too. Like I hear the same thing over and over again, and then I hear somebody else say it, and it's like, oh, now it makes sense. And it's not necessarily they said it in a different way, but maybe my brain finally clicked in or whatever. Sometimes I'll hear something 50 times in a row, and it doesn't click until it clicks, right? It doesn't click until it clicks.
And you don't know why. It's
like,
you just have to come at it from different ways.
Yeah.
So there is definitely, so when you sign up, we do have a foundations room that has all, like, I've never traded an option before. I've never traded a stock before. I don't even know what a limit order is. I don't know what, how quickly can stocks move? What prices can they move in? How much, like for an options contract, this says it says $1. Well, yeah, but $1 in options, equity options, that's $100. Oh, I didn't know that. I thought, that's why I did 100 of these. I'm like, well, you just need $10,000 of premium.
That's
you
a
need
big
to know
mistake
this
right there
before you go live. That's not it's $1, but it's actually 100 times $1. So we definitely have all that. There's videos. There's videos that are off. I don't want to say offline, but not during the class, where it's actually, okay, this is what we do, and I'm not reacting to something that's actually happening in the market. We have real time, or what at the time was real time. This is how we're applying all that stuff that we talked about on the campus in real time. And always that, I wish it was as easy as, well, when this happens, do A, and then when this happens, do B. It's always it's a fluid thing. There's no way to just say, well, 1, 2, 3. It's so easy. You want it to be that easy. The world doesn't necessarily know that, what I want it to do. And so you have to react to that. Yeah. So definitely there's ways we encourage our students to talk with each other. I don't give out personal information, but they can put out their email, or they can say, hey, listen, because for privacy reasons, they can't talk to each other on our platform, but they can say, hey, it's okay with me if you give, Sally here my cell phone number. And so we'll do that and encourage them. Hey,
right.
If you guys just want to talk, if you found out that you live in the same town, great. Get together and talk about trading. Have a barbecue. Who cares?
Right.
People come in and visit us too, because it's always good to do that.
Well, thanks, Michael. This has been a
Yeah,
great interview. A lot of good insight. And just to give everybody that's listening a bonus here, you were kind enough to give everybody a free pass
yeah,
to the room. And so it's going to be in the description. If you're watching this on YouTube, it's in the description right now. But if you're listening to it on the podcast, it will be posted in the description as well. You can go ahead and get access to that. And I highly recommend you check it out. It sounds, based off talking to Michael, a ton of education, ton of learning, a great experience for anybody. But thanks a lot, Michael. Really appreciate
yeah.
having you.
Thanks for having me. This was fun.
All right, well, that's it for today's episode. And if you guys were listening, thanks a lot. And we'll see you guys on the next episode of the How to Trade It podcast.